Its time is around 8:24. Let's look into today's Nifty 50 as well as Bank Nifty analysis. First, let's look into Bank Nifty. This is the mid of the first candle, the green line, and the zone here is the 5-minute zone. You can see the market gapped up at around, if you see from close to open price here, around 500 points of gap up, guys. And you can see the market consolidated and clearly broke this high, clearly showing bullish sentiment. And the market retraced took support from the VWAP level and continued the buying pressure. Here you can see that the market took support here, rejection candle from VWAP levels and continued further bullish pressure. So if you consider this swing structure wise, it's actually broke this structure high. This is the break of structure. And if you consider this swing here, the common point within this, to the common point within this, to the common point within this, you could have targeted the first target at 100% over here. And you could have targeted the midway between the 100% or the 1.68 level here. So if you see here, you could have targeted this level, or you can see you could have just hold it onto your position, and after this huge bullish candle, you can see piercing pattern and close above this close level. You could have exited here, guys. But for better risk to reward ratio, I think you could have taken long position here, rejection keeping a stop loss just below this candle, and you could have targeted the 100% here. This is the first target where you could have easily taken this, and you can see clearly this is a 1-minute order block where the market retraced here to support from the 200 moving average. You can see clearly the market broke here, but following candle itself, the market took support here from this 200 moving average as well as the and closed above this level and consolidated in this pattern. You can see this kind of consolidation is clearly showing some kind of bullish sentiment. We could have taken short position once if the market would have closed this level. And after this, you could have seen the rejection candle, you could have entered even short position and you could have traded this retracement level. So if you consider the common point in this to the common point in this, you could have targeted all the way to the VWAP level of the 200 moving average. So this is where you could have easily taken base once this low has been broken and the price closed below this level. This is where you could have taken short position and you could have targeted all the way to this 200 moving average. This is how you could have easily traded. And you can see following candle a bullish engulfing pattern here, guys. And the market clearly broke towards the high side upside and even closed above this level, clearly showing some kind of bullish sentiment. And you can see and consolidating. If you try to plot the anchor VWAP level here, guys, below of this candle, you can see price taking support here and they're continuing further and even it broke structure here and retraced to the 50 levels. And again, it formed a pattern like this, the edge pattern here, the channel pattern. And again, it broke here, but took support from this level, the 21 moving average, and continued further buying, guys. So you can see this kind of bullish sentiment where you could have easily taken. So if you try to draw the retracement of this price, the compound between the high and to the low of this candle, you could have targeted the 100% here or the 1.68 level, or you could have targeted all the way towards the close of that day, guys. You can see how the market really rallied all the way towards the upside. After seeing this kind of bullish candle, guys, you could have closed your short position here, the short trade here, and focused on long position. And you can see you could have taken support here and keeping your stop loss, looking at the support stop loss before that candle and targeting all the way to this side. This is how you could have easily targeted. Or in case if you consider this thing as the common point in this, to the common point in this, to the common point in this, you could have targeted the 1.68 level or the 2.68 level or the 3.68 level, or you can see the market even went all the way to 4.68 level. You could have just tried your stop losses as long as the market closing below the 21 moving average. You can see here is where the market closed below the 21 moving average. You could have exited your position there. And you could have easily targeted all the way to this and this. This is where you could have easily targeted. And you can see here this kind of swing momentum where there is no imbalance on it and there is no fair value gaps, or there is any impulsive momentum towards the downside. You can see price even taking support from this level here, of this bullish momentum. So if you consider this break of structure and if you consider this swing, guys, the common point, the swing low to the swing high here, you can see price taking support from this 450 level here. This is a 450 level where price is taking support. And you can see the market took support and continued for the bullish momentum. And in case if the market sentiment would have been very small, the market would have clearly broke this with fair value gaps and impulsive momentum after grabbing this liquidity high. But here you can see this zone acts also as a breakup block level where it acted as resistance here and it acting as support here. And you can see the market again continues further bullish momentum. And in case if you consider this swing index, the compound between this to the compound between this, you can see the market taking support from the 21 moving average, which clearly signifies some kind of bullish momentum. But if you try to draw this swing index, the compound between this to the compound between this, you could have targeted all the way to this high or above these close levels. You can see how the market would have easily reacted. Once the market clearly broke the 21 moving average towards the upside with huge momentum and consolidated in this pattern price, you could have easily entered long position, keeping your stop loss just below this candle itself and targeting all the way towards the upside. Or this is how you could have easily traded. Um, or if you consider this fixed term levels, the fib retracement levels, the count on between this to the common point between this to the count on between this, you could have targeted the 100% or the 1.68 level or the 2.68 level. You can see the market is showing very huge bullish momentum where you could have easily traded as long as prices moving in this pattern. This is how you could have easily traded this. As you can see, even the opening time only you could have taken calls, you could have easily traded profitably. And this is as simple as it. That's it, guys. You can see how this zone here acted as support here once it broke towards the upside and continued further bullish momentum. Here you can see the bearish sentiment here. This huge momentum towards the upside changed the whole sentiment from being bearish to bullish and consolidated where anchor we were taking support over here. So if you try to place anchor we here also, you can see after this kind of support here from 20 moving average and this anchor we level where price couldn't cross, you could have taken long position here, keeping your stop loss just below that, and you can see how the market valued all the way towards the upside. That's how you could have easily taken your position, guys. You can see you could have traded. And coming to Nifty 50, guys. So in case of Nifty 50, you can see clearly it behaved in the same way as Bank Nifty. You can see the market consolidated and clearly broke this high. Again, retraced here to support from 20 moving average and further continued bullish momentum. So if you consider this whole swing notice here, the from this here point to that point, you can see clearly the common point between this the common point from this, you can see price taking support from this 0.38 level, which I already told you in my previous videos. And the price is trading above the VWAP as well as the 100 200 moving average. So if you try to plot before the extension levels, the common point between this to the common point between this to the common point between this, we could have targeted all the way to 100% area. This is where we could have targeted the 100% here. Or else you could have done. This is where you could have exited, keeping your long position here after this kind of rejection candles and targeting all the way to 100% here. This is how you could have easily targeted it. So you can see after the kind of this market forming a rounding top bottom, clearly signifying some sort of bearishness. And you can see after this kind of huge bullish momentum followed by bearish candle here, clearly signifying bearishness. So you could have entered short position here after this kind of momentum and targeting all the way to pivot levels or the that level. The 200 moving average is where we could have easily targeted. This is another trade where we could have taken based upon moving averages, right? So you can see the market here, and this momentum changed the whole sentiment from being bearish to bullish. And you can see the market here found a bullish engulfing pattern and continued further upwards, taking support from the 21 moving average. And this is where you could have entered your position, keeping your stop losses below the 21 moving average and targeting all the way towards the upside. This is very simple, guys, but to explain, but this is what price action followed today. There wasn't much momentum or market was moving in one direction. Guys, you can see the market even didn't retest to 50 levels also, clearly showing very bullish momentum. So you could have just folded on to your trades and you could have made a decent amount of profit. So this is about Nifty 50, guys. And I hope you're understanding, guys. But in recent times, there is no good price action for that. But we should trade based upon candlestick psychology as well as with price action, guys. You can see this VWAP support, guys, here. When price is rejecting, here you could have entered long position. Usually VWAP will act as some kind of support or the 200 moving average will act as some kind of support. And you can see how the market is momentum. The resistance level here acting as support over here. And here it's continuing bullish. This is how you could have easily traded, guys. So hope you like what I'm saying. Please like, share, and comment, guys. So if you find my videos helpful, leave a comment below. And if you have any suggestions, please let me know, guys. Thank you.